Afternoon, guys. Welcome back to another video, or morning if you're watching this at a later date. Today, I just want to cover a very small topic. It won't be a long video, but it's just common mistakes traders make and mistakes I've seen even myself making, maybe on a consistent basis or one-offs. I just want to cover them. If you are making these mistakes and you don't realize it, hopefully I highlight that for you today. And we're going to work out ways where you can stop getting into those habits and create like a contingency for next time. Yeah. So common mistakes I've highlighted because like I said, based off of sometimes my own experience and helping others, these are the most common things I see traders doing, which are wrong. Okay, and it could be the reason why you're in a losing streak, or you just don't win that many trades overall in the long run. So rushing positions. Now this is a big one. I mean, I'm guilty of this myself, especially when I started out. Is seeing a position and price comes up to a level you've identified as maybe a key level of entry. Yeah, you've taken your confluences and you want to enter when price is at that level. Now, I used this example yesterday. I'm going to use it again because it's a very common scenario. All right, so you've identified that level as an entry position. Price has come up, but you just don't think it's going to get enough momentum to sort of tag you in before carry on its move to the downside, for example. Yeah, but people enter anyway. Yeah, and they think, oh, you know what, it hasn't got that much momentum. I'm going to enter anyway, and then you end up entering say 30 pips into your trade than where you should have entered. And now your stop loss is going to be at your entry point. So if price does have that momentum to come up to where you suspected based off of your prior analysis, you're going to be stopped out of a trade for what reason? Because you just didn't have the patience to be patient. I was really contradicting myself. You didn't have that patience, yeah? What you got to understand is once you've done your analysis, all right, and you come back to it later, you got to understand that you've done that analysis, for a reason, yeah. And if price doesn't have that momentum to tag you in, don't worry about it. Sit on the sidelines, okay? See what happens, because at the end of the day, the last thing you want to do is rush a position and lose money, for when price comes up and meets your level. Yeah, you didn't have to lose that money. Yeah, just keep that emotion, keep it on the sidelines, okay? If you're excited to enter a trade, or you see something after coming back to the market or your chart after a few hours and you've done your analysis, leave it, okay? Because you're literally looking at it and you're gonna screw up the trade basically. You're gonna end up losing more money. All right, I just want to cover Russian positions because that's a massive I'm guilty of it myself, like I said, but I know some of you are as well. Just be patient, take a breather, take a step back. All right, if you don't get in the trade, don't get in the trade, big deal. You don't lose any money either. All right, so not being in the right frame of mind mentally. Now, what I mean by that is sometimes, especially for this industry, is you need to be switched on, for analysis terms. So for example, if I don't know, something's going on in your personal life which is affecting you mentally, distracting you, just take a day off from the market. All right, because at the end of the day, if you come into the market with the wrong frame of mind and you start losing more money mentally, it's going to affect you even more than you may already be affected. All right, so even if you're ill, yeah, you're going to be focusing on your illness. You're not going to be 100% focused on the market. All right, so just take a few days off, guys. It's not a problem to take a break. Yeah, you take a week off or whatever, just like any other job. Take that breather because it refreshes you. Yeah, and when you come back, look, okay, I wasn't in the right frame of mind. I could have potentially lost money if I had entered the markets for that particular week. And just sit on the sidelines or just completely leave trading alone for that week. Yeah. Just focus on you, get better, and get that right frame of mind back. All right, because at the end of the day, it's just not going to do you any good. All right. Letting emotions get the better of you. Now, I've touched on this a few times in prior videos, and it links very heavily to rushing positions. And a common example I use is, say for example, you're in a 4-hour swing trade and you've identified a nice move, but that move isn't going to happen. You've analysed for maybe another day or so, yeah? So say you've put that trade on, that swing trade, and you're 2 hours into that trade, yeah? And, price hasn't really moved, yeah? Because it wouldn't, it's a 4-hour time frame, yeah? Unless, I don't know, fundamentals are involved or whatever. What people do is, they forget they're in a swing trade, and it could take some time for the market to sort of address their move. What they do is they go on to, say, for example, MetaTrader, 2 hours into that trade, and they'll go down to lower time frames. So, 30-minute, 15-minute, 5-minute chart. And then they'll see like a massive move against them, yeah? And they think, in their mindset, they're thinking this move's going to affect them. But you've got to understand, you're in a higher time frame, yeah? So if you saw that move in a higher time frame, you'd barely even notice it, yeah? It would probably, the candle would barely move. But what people don't think about that. They think, I've got a massive move against me now, my market momentum is against me, and I'm going to lose money. So what they do, even if they're in drawdown, is they'll get out of that trade, come back to it a few days later, and think, uh-oh, it hit target. And they don't remember the fact that they let their emotions get the better of them, yeah? Again, it links back to Russian positions. You've done your analysis for a reason, guys. Stick to it. Stick to what you've analysed, all right? Because if you come back to it later and you haven't been looking at the charts, you're going to start thinking things outside of a trading mindset, all right? So don't let your emotions get the better of you. Don't rush positions. Make sure you're in the right frame of mind. Another key point is traders don't properly calculate a good and also safe risk to reward before a trade, which ends in disaster if you lose. This touches back to one of my first videos of people focusing on the reward gain, and also the, however much money they're going to win if it hits take profit. And people don't take the time to work out the risk and the stop loss safely. All right, so go back and watch that video. I can't remember what it's called. I think it was just risk to reward, stop loss, take profit, all in one. Sniper entries, that's what it was, sniper entries. So go and watch that video and you'll work out how to do a safe stop loss, safe risk, minimize your loss, maximize your gain. That's what I taught you in that video. So go and watch that and you'll see why it's a common mistake for people not to calculate a good and safe risk to reward percentage before a trade. So lacking on confluence. This is also another thing people seem to skip sometimes, all right? So say, for example, they've got 5 confluences for a trade and 5 confluences for an entry. Sometimes, again, linking to Russian positions, people will see 3 confluences being ticked and think that's enough to enter their trade. You've got to be strict on yourself, guys. Yeah, you've got 5 confluences for a reason, all right? And you need to make sure those 5 confluences are ticked before entering that trade. And consequently, when people enter after 3 confluences, yes, you might get lucky and win that trade, but most commonly, you end up losing because the fourth and fifth tick on your list, they're crucial ticks. Yeah, you've outlined them for a reason, so stick to them, and make sure you don't get sucked into that lacking on confluence and Russian positions trap. Okay. Trading at times outside of their overall plan. Now, say for example you've been in a trading plan for 6 months, a year. You're used to trading between specific times, okay? Now, this might be new to you guys, but different sessions of the market, so New York, London, Asian, there's different elements in different sessions, okay? So say for example you trade the London session. It's quite a momentous session, all right? A lot happens during the London session. Whereas if you then start trading at night, during the Asian session, you'll be like, why is the market so a lot slower? Well, it's because you're trading outside of times. And you don't know what happens during this session, all right? You're not familiar with it. So it gives that element of being uncomfortable again, which is not good because you haven't stuck to your plan, all right? So make sure you stick to your plan. Even if you see a killer position, just sit on the sidelines, okay? Or even educate yourself about that session more before you start trading it, all right? So not getting the bigger picture before lining up a trade, massive issue. So for example, if you're a day trader or intraday, for example, and you trade in the 30-minute time frame, you go in for a buy and don't understand why there was a massive sell-off. However, if you had gone to the daily time frame to check the overall trend, you would have seen market momentum was down. It's a massive, sort of problem. I mean, I'm guilty of it as well. But seeing your emails, a lot of you are guilty of it as well. So just make sure you get that bigger picture, guys, before entering up a trade. Get a bigger picture and see, right, okay, overall market trend is down. So what do you want to be looking for? You want to be looking for sells, yeah? So the sell is where the strength is. Don't get me wrong, short-term market buys are good in a overall downtrend. Just be safe when doing it. Make sure you've done your analysis, all right? Another mistake is not journaling trades and past mistakes. So my theory on this is if you're not journaling your trades and your losses and writing down notes of your mindset, how are you ever going to improve? Unless you jot it all down mentally. But you can't like store every single trade in your head, all right? It needs to be on paper, all right? Because you can, well, not paper, a document or whatever, but you need to take something from losing trades. That's how you become a better trader, all right? So if you're not journaling trades, just make sure you are, you start to from today, because there's huge benefits to journaling your trades. It's not just a big load of waste of time, all right? I promise you that. So this is a rushing positions example. You can see I was going to use just straight lines, but it didn't really represent the markets well, because no market is stereotypically straight, all right? So in this, we're going to say that this duration of this little consolidation period is 1 month, yeah? So first thing you want to do is identify support resistance for the most recent duration of time. That's important to you, all right? What I see a lot is traders entering down here. Say, for example, they missed this move, they missed this break here, where they were planning to enter, maybe this retested before coming down, but they want to catch the move and they start panicking, like, oh no, I've missed out such a great move, blah, blah, blah. What they do is they enter here with a stop loss just above, and they think, oh, momentous move, I don't need to put too much of a stop loss in. And then market reverses. Yeah, it's completed that move. And what that results in your stop loss being hit, and you lose money from that trade, all right, because you rushed an entry, all right, to try and catch a move you was watching for a month. Now, I know that can be a killer. You've been watching a trade for 1 month, you've mapped out everything you've mapped out, and you end up missing the move. It happens a lot, guys. Yeah, you're not going to catch every move, all right? There's a lot of markets. You got to watch a lot of markets. I mean, if you trade, quite a few pairs, you're going to miss some moves. But the best thing to do here is, if price is like, sort of down this area after the break, that's quite a considerable break, yeah, and it's quite a momentous move. You got to understand that momentous move at some point will start to sort of, catch itself, and a reversal may happen, yeah? So just sit on the sidelines, guys, yeah? Use this trade as a back test from the sidelines. Say, look, I was absolutely right that this move is going to happen. Take the fact that you've done your analysis and your analysis was correct, journal it, and you know what you're looking for next time in this pair, okay? So just do not try and rush an entry to try and catch moves, because it will just end in disaster, all right, unless you are lucky. So remember that patience pays off in this game. If not, it teaches you some sort of lesson. All right, so as you can see, the lesson we got from this, if we didn't enter, was we was right in our analysis. All right. Patience pays off. If you weren't patient, you would have ended up losing that trade. Okay, for example. And in no way should you believe you are missing out on money because you've taken a seat on the sidelines. Start thinking, hey, I didn't lose any either. No, it's a fantastic point. Don't think you're missing out, okay? Think about it as, the move has already happened. I'm not losing money by stupidly entering now, yeah? There'll be so many more positions in the future, yeah? Just take a seat on the sidelines just for one, all right? Because, I'd rather not lose anything than lose something, all right? Or do a 50-50 and potentially win something. I don't like 50-50s, yeah? I like 90-10s. So that the point I'm trying to get is, don't rush your entries. It's not a problem if you sit on the sidelines, all right? Journal it. Make sure you learn from it. 100%. That's it. So how to avoid these mistakes. Now, I've jotted down 6 key points here to how to avoid making these silly mistakes. All right, like I said, I'm guilty of these mistakes myself. So just have the right frame of mind before even considering opening charts. So evaluate yourself. You know, I don't know, go and listen to some music, and if you're just not feeling it, just take a day off or take a few days off. Take a week off. Yeah, have a break. It's not a problem to have a break. You're not missing out on anything. All right, because you're not losing anything. Stick to your trading plan. Very key. You know, as I mentioned in yesterday's video, sticking to your trading plan. You know, if you do make a mistake, your plan is there to back up that mistake and play a trump card, so you eliminate that mistake and make the loss back. Okay. If you start diverting from your trading plan, you're going to make mistake after mistake after mistake after mistake, and because you've got no plan, you've got no journal, you don't know where you're going wrong. All right, and you end up getting so annoyed and end up stop trading. You stop trading and call it a scam or whatever. Stick to your rule book when lining up entries. Now that's confluences, guys. Your strategy, stick to the confluences. Don't cheat yourself, because as I just said, the only person you'll be cheating is yourself. Be patient, yeah? Don't wait for 3 confluences. If you've got 5, wait for 5. Don't enter on 3. Wait for 5, all right? Take the time to calculate a safe RTR, take profit and stop loss. Now, again, going back to my sniper entries video, you can learn how to do that there. Minimize your stop to maximize your gain. In some form, try and journal your history to ultimately allow you to become a better trader. As I said, guys, if you journal your losses, try and take something from them, because at the end of the day, there will be a mistake at some point because you lost that trade. Yeah, you missed something. All right. If you can try and take that something into your next trade, you'll avoid that loss next time. All right. Ultimately makes you become a better trader. So there's my 6 points on how to potentially avoid these mistakes. Now, again, don't beat yourself up if you do end up making these mistakes again. Like I said, we're all human. We're not going to remember everything. All right. It's about taking something from those mistakes and trying to avoid making them in the future. So guys, as usual, if you've got any questions, leave a comment down below. I'll happily answer them. If you want to email me personally, there's my email. Send it over. And as always, guys, have a good rest of your week, and I'll see you in the next video.